Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 24th, 2017. It's a little bit before the market opens. I've been reviewing the charts most of the morning. Markets will be open in about 10 minutes. I hope to have this video wrapped up by then. Just a quick update. An overview of a lot of what we covered recently, but more condensed, just some of the more important things that I'm watching. Let's just stick with the 60-minute charts on the broad markets today and look at a couple levels to watch on the SPY. Let's keep an eye on this 235.10 level, which you can see here is a little cluster right now. The SPY is indicated, as most of the markets are, to gap down. However, I'm looking as I speak, we're at 235.47. So just above that level, you can see there's a little gap there. If you look right where the this pencil thing is pointed, and there was a reaction. So that's it's a not a major support level, but it's certainly significant. And if in the next 10 minutes the markets can move a little bit below there, let me tell you really where. Let's look right here, this low on this candlestick, which is 235.56. So yeah, we're at 235.47. Therefore, what we're looking at is a potential. Oh, we've got a candlestick here. I missed that one. 235.51 on the low on that one. So if we can gap below 235.51, we put in a what we call an island cluster reversal top on the 60-minute. This is a cluster here, an island cluster. You see it's separated by a gap, so it would look something like this. If we gap down below the bottom of this candlestick here, and I'd like to really see us take out this 235.10 support. That doesn't have to happen on the gap as long as we gap down below here and then we move. So that's what I'm looking for, and this will significantly increase that bearish case, that reversal I'm looking for. I believe that began to happen yesterday. Just about every other index but the S&P was down. So in my book, the correction has likely started as of yesterday. Again, there's different markets, different indices out there. So if you take the broad market as a whole, you look at the NASDAQ, mid caps, small caps, NDX 100, all that good stuff. Most of those were down. So there's that. That's what I'm looking at on the SPY. And as I've been stating for a long time, this is my minimum target down here. C4 is correction number 4, all series of divergent highs. 229.71 is very decent price support. And it looks pretty thin. You look at the volume at price histogram over here to the left. Thin means there weren't a lot of trades. We just kind of had this low volume, steady, almost artificially induced rip. It looks like a lot of high frequency trading just walked us up there. And I think that'll be a relatively swift move back down. And again, so call it 230-ish area because you have this yellow uptrend line as well that comes in. Let me zoom out and you can see that better here on the 60-minute chart. So that's where I think we're headed. A little blip along the way, some minor support around 232 to check out on the SPY. QQQ, let's take a look here. Okay, as pointed out yesterday, we have this little breakdown here. This minor uptrend line I was watching, a very tight, well-defined channel. We back tested this other wedge from below, and yesterday we broke down. You can see some impulsive action. Then you also can make out what appears to be a looks like a bear flag pattern here, bear flag continuation pattern, with this being the flagpole. And we are looking to gap down this morning, so as is typical with bear flag patterns, the move down out of the flag, they are continuation patterns, and the move down is typically as impulsive as the move leading up to it. So this is just going to help seal the deal. We've had a breakdown now, and we're going to have follow through today, at least at the open. We'll see what the day holds, but you can see my targets down here, and there'll be some reactions along the way. It probably won't be a straight shot down, rarely is, but ultimately I think we visit this purple downtrend line here, or at least that or that 120 182 level. The little asterisk just denotes that if we happen to go there quick, we might hit that 120 182 level. But as time goes on, this uptrend line comes in at higher and higher levels. So there's levels I'm looking at. First, this is a minor support level here, 127.51, and this would be my first downside target. That's set just above this horizontal support level. That's QQQ. And as I mentioned recently on the site, within the trading room, maybe the front page, the Qs and the IWM are my two favorite. That's where I'm, as far as my broad market shorts, those are the only two that I have. I'm short both via puts as well as futures E-minis, the TF, which is the Russell 2000 E-minis. And here's a story on IWM. I've talked about this long sideways trading range since early December. Bearish rising wedge. We recently had, as I mentioned in a video yesterday, we had this brief breakout, which I suspect will prove to be a bull trap, i.e. a false breakout. We broke above the top of the trading range, but we broke down from that wedge, pretty impulsive selling, a little bit of flagging action late in the day, and we're currently poised, as I look at the pre-market trades, at 137.51 right now on the mid caps, small caps, I'm sorry. So that puts us back down within that range. So if things play out the way I expect they will, we'll see a relatively swift move back down to the bottom of the range, possibly reaction there, and ultimately a move down to any or all of these potential price targets that I have listed. Okay, that's the broad markets, and a couple other things that stand out to me. As you guys know, I've been just pounding on the semis for a long time, waiting, but I think our time has come. We're poised right now. SMH has indicated, let's see, is it 75.50 or so? Either way, we're going to take out this purple downtrend line today. It looks like this alternative, uptrend line, and watch for a break of that wedge, and that will send the semis lower. That's one of my, as far as sectors go, I can tell you, undoubtedly, I have the largest short exposure via individual semis and the leveraged ETFs there. So a couple others that I talk about are SOXX, same story. You have this yellow bearish rising wedge within this larger pattern. So a break of this line, which we'll probably get today, will take us down. This is your first support level, and then these are additional price targets. The ones in green are what I call high probability price targets, and each of those levels I'd expect a reaction. So if you're an active trader, you can, try to game the bounces. This is just my forecast now. I always have to, if I want to, let's say, cover a short position and maybe reverse it for a quick long, I have to have the charts confirm at that point, 5, 15, 30 minute, maybe out to the 60-minute time frames. If they don't confirm a bounce, we may smash right through a support level. So just because these are pretty well-defined support levels / targets, sometimes with impulsive selling, and I think there's a lot of pent-up selling. I think once the dam breaks on this one, you're going to see some pretty ugly impulsive selling in the semiconductors. Just my 2 cents for what it's worth. XSD, same story. These are all just different semi ETFs. So, okay, I've covered that. Yesterday, in case you missed the video, there was a couple things I highlighted. What I've noticed to be what appears to be institutional flight to safety in the defensive sectors. You can see this big move up in the utilities, especially recently, a sharp run. So this has occurred while the market's pushing to new highs, and really what's kept this market going are the tech stocks and the semis, things like that are way ahead of themselves. And it appears the smart money, is a little concerned because they're putting money into these defensive issue stocks. There's no reason that the stock market should be trading at all-time highs, and yet you're seeing a strong bid, a lot of money coming into defensive sectors like utilities and consumer staples. Here's XLP. I mentioned this yesterday. It's had a heck of a run. I wouldn't add to it at this point. I have no desire to go long or short these defensive issues, but just wanted to point that out as another red flag. And I mentioned that yesterday. Okay, I promised to keep this video short, so we'll just wrap up. And again, I'm not getting into all the individual trade ideas, just some of the things that stand out. XLF I also covered yesterday. Actually went through a video, made a case that I'm certainly bearish on XLF. Here we go. Market's open now. We're down about 1%, and let's take a look at the 60-minute chart. So yesterday I started, taking short exposure in the financials because of that. And again, I did a whole video, so I won't spend any more time on that today. You can check out that video. And as any individual trade ideas pop up, I'll let you know. But I can tell you right now, even though it's not an official trade idea yet, maybe soon, semis are still one of my favorites. So I mentioned in the trading room, I'm typically not a big fan of buying and holding the 3-time leverage ETFs, and I know some of you don't have the ability to short them. So you can either short SOXL, which is the 3-time long semi, or you can just short the non-leverage ones. That's fine too, guys. Keep in mind, SMH, XSD are the ones I just covered there. But I was going to say that if the semi's correct in the way I think they will, which is a rush for the exits, a pretty swift unidirectional sell-off. By unidirectional, I mean very few givebacks. Givebacks meaning green closes for the day. That's where the 3-time ETFs have very little, if any, decay. And in some cases, and you can check this out on my FAQ page on the site under the ETF section, I explain that decay in detail. There are instances where, let's pull up SOXS. This is a 3-time bearish semi. There are cases where you can actually outperform, in other words, do better than 300% the return of the underlying index. And that would be if you have just a series of green candlesticks with very few red closes, daily closes, because that's where the decay. You don't want to be in a leverage ETF in these sideways markets, but in this trending market, I can almost assure you that SOXX did as good or better than 300% the underlying index, because that was a straight up rip. And this is what I'm looking for right now, something comparable to these. And so therefore, this is one of the few exceptions where I say if this is all you have access to, and you want to use a little leverage or short inside an IRA or something, that usually, well, obviously you cannot short SMH or XSD or SOXL inside of an IRA. So this is one of few options to short the semis. That's that. Let's wrap it up here. If you guys have any questions, feel free to reach out to me in the trading room. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.